Okay, so hello everyone. Today I'm gonna update the market, the financial market yesterday, which is June 30, 2021. So overall, the stock market yesterday give you more a clearer and powerful view. So the stock market yesterday, I'm sorry here, from 30 here to here, right here. So the stock market started strongly yesterday as a few good economic data released helped improve the sentiment. The Case-Shiller index, the Case-Shiller index showed that was published yesterday showed that the U.S. housing prices increased like 14% year over year, boosting stock prices in the construction and the home ownership sectors. After an initial price initial price movement early in the morning, there is like sentiment quickly turned and traders spend most of the day reducing risk, mitigating risk, sending the indices lower in a moderate fashion. This move downwards caused the indexes to the end of the day just above the prior closes. Though readers should note that the S&P 500, the Nasdaq, and finished at record high, all told the Dow Jones Industrial Average was up around like um only around 9 point. The S&P 500 finished higher by 1 point and the Nasdaq rose 80 points. Though major average ended at nearly all-time highs, as you can see here, all the Nasdaq, the Dow Jones, or like have I'm sorry here the Dow Jones, have record high. This is I'm sorry, I have been adjusted for just trading day if like counting the kind of overnight hour which lasts until 12 p.m. the US time, that is record lower. However, only during the trading days it record the higher, which is like increased by, this is Nasdaq, so it rose around 28 points. Though the major average ended at nearly all-time highs, you can see market breadth was slightly negative. So as decliner outpaced advancer by a 1.2 to 1.0 ratio. Okay, so here, let's wait for a little bit for the chart to load. So this chart is gonna help to show each sector and how much it grow. So let's just wait for a minute. Okay, so for yesterday, the technology issue were among the best performers, aided by strength in a few semiconductor names. Computer and the technologies rose a lot compared to other sector, and the as compared to the discretional product companies, the stable product companies rose lower than the discretional one. Meanwhile, okay, so like oil prices increased during the day, also increased during the days, and as trader like okay, so this is the oil increase during the day as like trader think demand continue to outpace supply. Meantime, the U.S. Treasury bond yield were quite mixed. Um, the bond yield were quite mixed, while the 1 year, the like near term, 1 year to 5 years bond is increased. This increased yesterday. However, the U.S. 30-year and longer term tend to decrease. I'm sorry, this is like more like today rate. So yesterday is lower. Is decrease. So we cannot say anything about it because this may be just some noise. regarding the US 10-year rate, if we want to look more at the kind of larger scenario and bigger larger picture, then we can see that it is like, so if we look at the bigger picture here, we can see that it does increase and it level off a little bit here, but the increase here still is like not really good for the economy. And when the yield decline like this, it definitely help for the economy. So as a whole picture, it is declining on the declining trend right now. So it's still, considered as, not too bad, but still, if it keep, at this high rate, then it's not going to be good for economy in the long term. It's still on the downward trend. So, let's look for a couple of weeks to see how it's gonna go in the long term. But expectedly, because many COVID-19 restriction has been lifted, then we expect the trend to be, declining. Okay, so the future market started positively June 29th as sentiment rose. This is like, I'm sorry here. This is the future market. Okay, so the future market, I'm sorry, this is for July 1st. Okay. Yesterday night, it started positively yesterday night, as you can see around here. Positively yesterday night. As sentiment rose after the official close of the section, it continued throughout the evening hour and was decided green by the midnight here. By the morning, had taken a turn lower and were slightly in the red, suggesting a weak start to the trading day. Okay, so next let's look at the US market fear gauge. So here's the Chicago Board Option Exchange Volatility Index. This is the fear gauge of Wall Street. So the fear gauge has pointed that the fear has tumbled to pre-pandemic levels, an indication that equity investors have grown relatively comfortable. The stock will keep climbing even after a stretch of acute market volatilities. It seems like investors have been more and more comfortable with risk as the moment now. And if we look more closely, like on June 25th, which is around June 25th, this is close quite June 25th. So this is close quite low, like at only 15.62. It's lowest settlement since February 20 here. The index which peaked the index which peaked at the record on the March 16 here is a measure of stock market volatility expectations based on the S&P 500 index options, and the VIX closed at 15.65 on June 11 before bumping to 20.7 as the Federal Reserve moved up its forecast for the next potential interest rate hike. It closed at 15.76 on June 28, while well below its recent highs. I'm sorry, let me move to a more up-to-date one. Okay, so here's the chart. It closed, okay, I'm sorry. Just wait a little bit. Okay. So let's take a look. Okay, so here we can see June 28. This is like, yeah. So on June 28, it's quite, it closed at around 15.67 on June 28. The recent decline in the VIX is a sign that investors are seeking less protections from the option market for their investment in the stock market. The drop shows that fewer investors believe that a spike in cases of COVID-19 variant, skyrocketing inflation, or a severe slowdown in the economic recovery will derail the current rally in the stock market. Okay, so while the declining VIX signal investor complacency is not a sign of looming trouble. It's not a like trouble, and although the drop in VIX is also a sign after that investor after more than a year of government stimulus and ultra loose Federal Reserve policy are adjusting to the idea of fading fiscal and monetary support. Okay, so it seems like the economy is beginning to normalize. This quarter, GDP is forecast to return to the pre-pandemic level, and the market has gotten used to the idea that as the emergency receipt, the emergency support will also naturally fade. However, there's also another indicator, which is fixed. I'm sorry, yeah, fixed. Oh, I'm sorry, wait a minute. Okay. So skill index, this index gonna measure terrorists in the S&P 500. So let's look at another indicator to see how it goes. So like we can see that around like June 15, around, I'm sorry, here. Okay, so around June 25th and 26th, it reached its record high. Uh, Around 161. The index typically ranges from 100 to 150, this level below this, and higher number tend to indicate greater perceived tail risk, an event with a low probability of occurring but would cause a significant price swing to an asset. So there are still some sign of uncertainty in the market. However, apart from this data, all of the data show really promising U.S. Economic growth. So looking ahead, a slew of economic data result will be released. Have released yesterday. So here's the number of data that released later yesterday night. Here is the ADP employment report. So basically, this report help us to kind of measure the non-farming activities, and these activities include like um, include various ventures like handicraft households as well as non-household, small-scale manufacturing, construction, etc. But of course, it mostly designated in rural areas. So it shows very, promising, positive statistic when the national employment report for these sectors increased almost 700,000. Small business report is really, really promising for the U.S. economy recovery. Also, like there's also the pending home sales. So here's the pending homes in the U.S. were up like 30.1 year over year in May of 2021. Yes, and also yes in after searching a record of 51.7% in April. So actually, it has not been updated yet. I'm sorry. I'm gonna update this for tomorrow. I'm sorry, for today. Later today, around 4 p.m. New York times today. So this is still the May data. So let's skip this. And yeah. So today is maybe like we should expect there is some kind of really important release. Okay, here is the market economic calendar. So first day today, we're gonna see the initial unemployment claim, construction expenditure, purchase PMI, and the Fed data. Also, we also expect like a few regional Fed chairs will be speaking for today, giving further insight into how the central bank is thinking right now, whether it's gonna increase or whether it's gonna decrease the interest rate. So yes. So generally, yesterday was quite a busy day. There's some really positive economic data released. And also like there are a lot of positive news regarding the volatility index, showing that the investor are more confident now, which is really important for the further growing economies. Um, and in this week, there's going to be a few more company will release this quarterly data ahead of the 3-day holiday weekend. These include a wide swath of industry, including retailers, semiconductor, and food companies, which also like really important. Additionally, like some company like McKinsey and Dow 30 component of Walgreens Food and the spice maker. I'm sorry, not McKinsey, McCormick and Company on the docket tomorrow, which is, I'm sorry, today, US time. Overall, we think that the trader will be looking at economic report and commentary from the regional Fed president to determine the market direction. So overall, today is gonna be like 4 p.m. today. It's got a lot of economic news. I'm gonna release the market recap right after the stock market trading section and yes, and yeah, one more important news. Actually, it's not really relating to the market cap, but I think it's quite interesting to mention it right now because it's related to kind of deposit money in the bank. So okay, so bank use excess liquidity to shed another 100 billion of CDs, which is, the deposit, credit of deposit. So basically, this article saying that the the loan, the balance between the loan and deposit right now is really imbalanced when there are a lot of deposit but a few loans. So this makes the margin for bank lower, and they are trying to reduce the interest rate so that there's like a better balance between the loan um, and the deposit, and which level of interest rate is appropriate to kind of balance out between the two. So this also like shows some kind of confidence of the US citizen in the banking system, which means like it's really positive now, to be honest. And there's another article released by S&P Global about robust stress test results set day for 100 payout ratio at US bank. This basically saying that after the Fed have doing the stress test for around 23 major holding companies in the US economy, it shows that all the bank and the holding companies right now are really at a good state with really little risk, few risk of default. However, I still need to read more about their stress testing method before conclude more on the kind of accuracy of this method. Yeah, so I'm gonna read more about this and update to you tomorrow. But basically, it's show really promising, and they and all the holding companies saying that they have enough capital reserve to still ensure the payout ratio of 100%. So that's it for today. Okay, so I really thank you for tuning in and listening to me. Today, my kind of summary is not really good. I'm really sorry for that. And actually, it's quite late. I should do it earlier, not this late. So tomorrow, after the market bell is, ring, closing market bell is ring, I gonna like release another market recap around 4 p.m. New York times tomorrow. So really thank you for listening and meet you guys in the next videos.